Now, the war with Iran is adding to more uncertainty in the U.S. economy. Gas prices and global markets remain volatile. Still, the White House insists there's no reason to be concerned.
It is the president's belief and his economic team's belief that the economy continues to be very strong. It's robust and will be able to weather any of the temporary impacts of Operation Epic Fury.
Kristin Myers is here. She's the ETF editor-in-chief for Asset TV. She is with us now to break down the economic impact of the war with Iran and make complicated things sound very straightforward and understandable for people like me.
I'm going to try. Morning.
Great to have you with us. Let's start with gas prices.
Yeah.
The U.S. is less reliant on foreign oil than some other nations. So why did we see gas prices jump so quickly and decisively this week?
Yeah, so, I mean, to that point, the United States is a net exporter of energy. And when it comes to oil, there is a global oil glut, which means an oversupply of oil, which provides a nice little bit of cushion. But the reason why we're seeing these spikes in oil prices is because investors are incredibly concerned that the tensions are going to continue. And essentially, Iran is the fourth largest oil producer in OPEC. And so if they are having conflict and can no longer produce oil, that's going to have knock-on effects to the oil supply. And then you also have the Strait of Hormuz, which about a quarter of the global oil supply goes through that very important and strategic shipping lane. And so if they close that, which they came out and said that they would, any disruption to that is going to cause disruption to, again, that oil supply. And that's why you're going to see those prices
and there's no hint
higher.
That this is a short-term thing, or the end is even near. What other sectors then might this impact?
Right. So there's going to be some sectors that are positively impacted and some that are going to be negatively impacted. So if we're going to look at pure prices, for example, oil, energy, those are going higher. So if you are someone who has already invested in oil and energy, this is something that's doing pretty well for you in your portfolio. Then you also have those safe haven assets. Think gold, silver. For some investors, that's even going to be cryptocurrency. Those are also starting to do very well. However, there's also the flip side. There's going to be some sectors that are not doing well at all. So as oil prices go up, think about transportation, logistics, manufacturing. Those are going to be taking a hit. If you wanted to buy a plane ticket today, it's going to cost less today than it probably will tomorrow if those oil prices continue to go higher. And gas is so important and necessary not only for manufacturing goods, but for getting the goods from the factory to your doorstep.
Right.
And so the higher oil prices is also going to negatively impact that.
So there are some places that will be more expensive, some less expensive. We are fewer than 2 weeks before the Federal Reserve looks at interest rates once again. How does this then impact the larger global economy and this effort in the U.S. to get inflation under control?
Well, higher oil prices pretty much makes everything more expensive. It is an inflationary measure. If oil goes up, if gas goes up, we're going to see inflation across the board go up. Now, here's what we already know about the Fed. They've already said that they're not really going to massively cut rates as much as investors were hoping, that they are very focused on constraining that inflation rate to 2% target. We are not there yet. So if they have inflationary concerns, they're not interested in cutting rates. And so when it comes to that Fed meeting in 2 weeks, as you were mentioning, right now markets are pricing a 98% chance they're going to hold. So if you were hoping for a rate cut in March, I hate to be the bearer of bad news, you are probably not going to get it.
All these things are connected, and it could change at any minute. That's why Kristin's here to break it down for us. Kristin Myers, thanks so much.
Of course.
Great to see you.